I'm Charlotte and this is the Looking After Your Pennies YouTube channel. Today I'm going to tell you how to start investing in 5 minutes or less. Let's start the clock. First up, this is not financial advice, it's education. Do your own research or speak to a financial advisor if needed. With investing, your money can go down as well as up. You need to understand that risk. Let's cover the basics. There are lots of things that you can invest in. We call these assets. Typically, when people talk about investing, they're referring to the stock market. The main assets that are available here are stocks, also called shares, and bonds. Shares are where you own part of a company. If it does well, then you hope that you can sell it for more than you paid for it. You might also receive dividends. This is where some of the company's profits are shared with shareholders, hence generating income. Bonds are different. These are loans to companies or governments. In exchange for loaning them your money, they pay you interest. These are considered less risky than shares, but typically you will make less money. In addition to these are funds. Funds are groups of shares, and sometimes bonds too. The shares might be grouped together because they follow an index, such as the FTSE 100 or the S&P 500. We call these index funds. How to access the stock market? You need an account with an investing platform. There are lots of different investing platforms out there. Some have been around for years and others are newer. Some are accessible via your computer and some are app-based. A few examples are Vanguard, Hargreaves Lansdown, Wealthify, Freetrade and eToro. But there are lots more for you to check out. By signing up to one of these platforms, you will get access to a range of stocks, bonds and other assets. Not all platforms offer the same thing. Some might not offer bonds, for example, or they might only offer stocks from the UK. You'll need to have a little think about what you want to invest in. What accounts should you get? There are a few accounts that you can use to actually invest your money into the stock market. First up, there is a general investment account. Everyone offers these. You can add money to it and then invest that money into the assets available on your chosen platform. Any money invested through a general investment account will be liable for capital gains tax and dividend tax as appropriate. One way to avoid these taxes in the UK is to use a stocks and shares ISA. You can place £20,000 into ISAs in each tax year, and any money you make on it is tax-free. You should still have access to the same investments as you have with a general investment account. Therefore, it can be smart to use this allowance first. There are also junior ISAs for those who are under 18. They have to be opened by a parent or guardian, but they will give you access to the stock market. Pensions are the other option. These are a little more complicated than I have time to explain here, but you can open a self-invested personal pension or SIP and invest through that account. They have lots of rules, and for most it will be beneficial to pay into a workplace pension rather than a private one. So how do you add your money? Each platform is slightly different, but generally they work in roughly the same way. You will need to add some sort of payment details. You could set this up as a regular direct debit or make a one-off payment. Once you have added funds to your account, you'll need to decide where you want to invest that money. Searching for the company you want to buy shares in or the particular fund is normally the easiest way. Then you will enter how much you want to buy of that company, fund, bond, and confirm your order. Selling is equally as simple. Head to the same page and select sell instead. It may take a few days for this to happen and arrive in your account, so be prepared for that. So what should you do next? Research the platform you want to use. They all offer different things at different prices. Look into the fees that they charge. This might be a percentage or a fixed amount. Compare this to other platforms to see if it is as cheap as it looks. Check out any other fees involved, such as those for making trades or managing a fund. These costs add up. Decide how much you have to invest. Think about a regular payment. Finally, make sure other areas of your finances are in good shape first. Think about budgeting, paying off high interest debt. Check out your workplace pension. Thanks for checking out the first of this series, Finance in 5. Hit subscribe, press the like, and I'll see you in the next video.